Mike here. December 4th was a bloodbath. Over 800 points at the lows of the day on the SPY, and we really did not even, there's no bounce. We had one bounce attempt on the SPY, and it was very, very short-lived. Then we sold off into the close. This move really caught me by surprise here, guys, on the SPY. And what I'm going to talk to you about in this video is why the market's down 800 points, and also talk to you a little bit about some risk management with my tier trading strategy, which really helped me out today and helped me keep a losing trade, a very minimal loss instead of instead of a full-size loss, it could have ended up hurting me. But that tier trading strategy really helped me reduce my risk and take a really small loss. So real quick, we'll talk about the SPY. We gapped down today after the big gap up yesterday. We kind of held yesterday's gap up. It was a nice day yesterday. We come in here today and the market gaps down. We slowly grind lower in the morning, and right at 12 o'clock, guys, the floodgates just opened and the market just collapsed. At this time, at 12 o'clock, I was actually, I'd schedule like one-on-one phone calls with our members, guys, like during the day and after market to talk about, certain topics that they want to go over or, discuss strengths and weaknesses. And, I'll do like trader assessment phone calls and those type of things with our members. And I was actually on the phone while this move was happening, and I was surprised. I kind of turned away from my computer a little bit, and I was on the phone and really kind of getting into one-on-one with a member, and we just fell apart. When I came back and I looked up at the screen, we were down like 600 points. I was like, what the hell just happened? And I'll talk to you a little bit about, why we sold off today and what was the catalyst behind it. Because you might be saying, how could we be up so big yesterday? And we're talking about Trump and China, a 90-day truce, and we're close to a trade deal, and then all of a sudden the market just unravels today. Well, a couple of reasons behind it, guys. The rhetoric coming out of China was not as positive as what was coming out on the U.S. side. So Trump had a much more positive tone behind this 90-day truce, and it kind of made it seem like we were pretty close to a deal. But people aren't getting that same type of feel out of China. There's kind of a feel that maybe yesterday's rally was a little exaggerated, that maybe we're not as close to a deal as we think. And then that kind of started the overall weakness. And then you had a flattening yield curve, and then you have a fear of a possible inverted curve. We actually inverted on the 2-year and the 5-year note. But what I mean by that is the 2-year, 5-year, 10-year, 30-year note, the interest rates that coincide with each of those is supposed to be the lowest on the 2-year, and as you go further out into time, it's supposed to be higher. And when you get the shorter time frames, the 2-year, 5-year, 10-year, when you start to get those interest rates or start to be higher than a 30-year and a longer term, you get an inverted yield curve, and that typically is a sign of a recession. So now the 5-year, 10-year, 30-year are still fine. The 2-year and 5-year, we had a little bit 2.8 versus 2.79. And that flattening curve, and that as we get closer to a potential inverted yield curve, that is what really worried the markets today. And that worry of a possible recession brought back all the fears of, the Fed and everything that the Fed Chairman Powell said last week, which was, some real dovish rhetoric around they don't have a set plan to raising rates, that they're going to raise, collect data, and then wait and see rather than just, be on autopilot with their raises. So that was important. And he said we were close to neutral versus in October when we first sold off, he said we were far from neutral. But all of those worries just came right back front and center as that yield curve started to really flatten out, and financials really kind of led us lower today. Um, and that's why I think that had a much bigger impact on the market kind of selling off here today. So I think it was really China and that flattening yield curve, and that flattening yield curve just kind of brought back all the fears of a recession again, and a slowdown in 2019 going into 2020, and it just kept creating further and further uncertainty on what's to come. And if we gapped up and we rallied off of the Trump and China truce, and then people are trying to say, well, maybe we're not as close to a deal as we thought, then maybe it was kind of the positivity was exaggerated from the G20 meeting in Argentina, and that's put all that together, and we're down 800 points, and that's really what happened today. So it's a moment of intense volatility, guys. This volatility is not going anywhere. I mean, if you just look at this action, I mean, my God, down, up, down, up, down. I mean, it's a headache. It really is a headache. It's a day. As a day trader, it's great. As institutions trying to scale in and out of positions, it's a nightmare. All right, so some major technical damage done here on the SPY. I mean, look at this candle. Are you kidding? Look at that candle. I mean, major technical damage done here again today, guys. And we'll see. I mean, everyone was so excited when we got this rally, and all of a sudden the market just opens up and just collapses out of nowhere, catches everybody off guard, and we'll see what happens. We'll see what happens. We'll see what happens later this week and the rest of the year. But who knows? I feel like every time I make a video, it's like the sentiment has changed, and that's how volatile and how uncertain this market is. That's how quickly sentiment can change. Yesterday, everything was fine. Everybody was happy. Everything's fine. We're gonna come to a deal with China. It's only a matter of time. The Fed's not going to raise rates as fast as we thought. Everything's fine. All of a sudden today, the world's ending again. It's crazy. Okay, it's crazy how quickly sentiment can change. So with that said, guys, let's get to the trade I wanted to talk to you about with this AETI. Nice winning trade for me on AETI yesterday. I went after it again today, and I took a loss on it. And the way that I go about trading what I call a TTG triangle pattern, which is my favorite pattern. I'll show you guys that in a second. But also using that tier trading method by entering a tier 1 position, which is 25% of your desired size, and then adding the rest of your position through a key level where you get some confirmation that the pattern is correct. That strategy helped me keep my loss very, very small today in this AETI, and that's what I want to talk to you guys about. So here you have AETI, guys. Here's our highs of the day. Okay, here's our highs. We break through the high of the day on the strongest volume the stock had the whole day. It doesn't get any better than that. You've heard me talk about in previous videos, the heavier the volume through the high of the day, the greater the chance you have of that previous high holding support. When it's the heaviest volume the stock had the whole day, it doesn't get any better than that. So the chances of that level holding support on the pullback become high. We pull back in, and we do hold support at that previous high. Bounce back up, put in a lower high, pull back in, and we find support once again at that previous high. The other thing you start to notice is the 38.2 Fibonacci retracement level also lines up perfectly with that previous high. And then you had VWAP, this orange line on my screen, coming up. So now we have 3 support indicators all converging on this area, creating a nice little area of support. That downtrend resistance line gets drawn, and this creates that TTG triangle pattern. Ideally, the way you want to trade this, guys, is you look for a tier 1 entry as close to the support level as you possibly can. Right there is my tier 1 entry. And then you want to add tier 2 on a high volume break up and out of that downtrend resistance line. So if we had this action, increase in volume, break through that downtrend resistance, right there is where you add tier 2. Okay, that's the way that I go about trading this pattern. That's not the action that we got, so I stayed in tier 1, okay? And then once the support level broke, I stopped out of my position, of that tier 1 position right here. Okay, so taking a loss, but on very small size. I'll take you to my trade announcement. Here you guys can see at 1050 long tier 1 at 154, stop loss 142 area. We'll add tier 2 through 160, and then you can see sold out tier 1 at 140. Okay, so took a 14-cent loss there, but only on 25% of my size. And that's really the concept behind the tier trading strategy, is to minimize your losses and then also keep you in winning trades longer. So it minimizes your losses in this example, and then the tier trading strategy you also use on the way out of a winning trade. That's something we can get into in another video or another example when I go through it. There's also a bunch of videos you guys can look up in the past that I've posted about scaling out of positions on the way up and how the tier trading strategy keeps you in winning trades longer. But for this video, we're just talking about the risk and how that tier method can help you reduce that risk. And guys, this is an A+ setup. Okay, this is, like, people ask me, Mike, what do you consider an A+ setup? This is it. Okay, this is what I would consider an A+ setup. If you show me this pattern again tomorrow, or, well, Thursday, markets closed to honor George Bush, I'll buy it again. Show it to me the day after, I'll trade it again, and then again, and then again, and again. There's just no pattern that's going to work 100% of the time. Maybe the market, maybe longs were, got jeopardized today because of the overall weakness in the market. Who knows? But this is an A+ setup. Nothing's going to work 100% of the time. There's not a single pattern that exists that works 100% of the time. There's not a single strategy that works 100% of the time. Anybody that tells you that is full of it. Walk away. Stop listening to them. They're probably trying to scam you into or selling you something. It doesn't exist. If it did, there'd be whoever figured out the 100% success rate pattern or strategy, they'd be the world's first trillionaire. It does not exist, believe me. Okay, you just have to put yourself in high percentage patterns and high percentage setups that work out more often than not. Now, it doesn't mean they're going to work 100% of the time or even 90% of the time, but if they work 65% of the time, 70% of the time, you're in really good shape. And this is just an example of an A+ setup that ended up not working, but because of that tier strategy, I'm able to really minimize my loss, and it's more like a paper cut rather than a broken arm. Okay, and that's really the lesson from today. So I'll see you guys on Thursday, and we'll see what we have in store with this market. We'll see if we get any new headlines coming out of the U.S. and China talks, and we'll take it from there. All right, take it easy, guys. I'll see you on Thursday.